Gold hits a 6-week high this Tuesday, and joining me in studio is Peter Hug. Peter, good to have you back 2 weeks in a row. How does a gal get this lucky?
Nice to see you again, Daniela.
All right, Peter, let's talk gold here. And what do you think was the major market mover this morning? Or what factors should we be looking at? I know we had some upside potential coming out of China as it released its latest GDP report. What do you think is helping gold out here?
Well, I think there's been some momentum over the past 2 or 3 days, and I think most of the momentum is coming from the instability and the uncertainty in the EU. I mean, there's I think some serious problems developing there, some serious storm clouds. You've got the Greek interest rates, approaching 2008 levels. Spanish and Italian yields are rising. All indicates a lot of fear. So we're starting to see some buying coming out of the continent. And, gold has been trading in a range, 1237, 1250. And, this morning it was able to take out 1250. Yep. So we're comfortably above it right now. We'll just see if it holds on or not.
Peter, we also had existing home sales rise by 2.4% last month. That's higher than expected. Do you see this affecting next week's Fed policy meeting? Or is it just another data point that will have short-lived effects on the marketplace?
I think it's a data point. I mean, I don't believe the Fed obviously will do anything this year because of the elections coming up in a couple of weeks. But I do not believe the Fed is in a position to move on monetary policy while the EU is trying to figure out what to do. So I just don't see them standing in the way of what Draghi's trying to do in Europe. Everybody is interconnected here, and I think the Fed will wait. And I think that could create a situation where the Fed may not even move mid-2015. It may even be delayed longer.
Now, Peter, I'd like to draw everyone's attention to your morning commentary where you said something really interesting. You drew upon the correlation between gold and platinum, and there's some interesting thoughts there.
Yeah, I mean, I looked at gold and platinum. I mean, platinum crossed over below gold for the first time in 2 years about 10 days ago. Recovered extremely quickly and is now trading at about a $20 premium to gold. So it really depends what camp you fall into. If you believe that the Europeans are going to come up with a monetary fiscal package similar to the Fed's QE of 2008, which I believe is on the table, and I think it's just a matter of time before the Germans capitulate to Draghi's wishes. Then the question comes down, will that be enough to get the European economies starting to grab gear and get some traction? If that's the case, from a risk-reward point of view, if you were a physical buyer of gold, you can buy a 1-ounce gold buffalo coin at about a $50 premium to the gold price, and you can buy a 1-ounce platinum maple leaf roughly at the same premium. And the price correlation is almost equal. So, I mean, if you wanted to play both sides of the equation, you wanted some protection, having metals in your portfolio, and you wanted to take advantage potentially of a recovery in the global economies on a supply-demand point of view, I thought that, buying a platinum maple leaf against a gold buffalo might be something to look at.
Right. I'm sure a lot of people will see it as a deal since platinum usually trades higher than gold.
So. It does, and sort of the rumor in the market, I can't confirm it outright, but I have it from very reliable sources that the U.S. Mint basically melted all of their platinum coins about 3 months ago because there was no demand in the summer. So the supply of platinum coinage on the market is relatively low to where it normally is at this time of year. So you may even get a premium spike on demand for the coin premium itself. It's interesting to look at. It's not a given, but I mean, if you were to play gold or platinum looks interesting here.
All right, good thoughts, Peter. And before I let you go, just one news bit that came out on Monday that I want to get your thoughts on. Citibank buying out Deutsche Bank's metals and energy books. Thoughts there?
Well, obviously, Deutsche Bank doesn't think or doesn't want to be involved in the business anymore.
Well, that was clear. That's been clear.
They got out of the gold fix, one of the first to get out, and obviously Citibank sees an opportunity. That's what makes a market. As far as it affecting the market, I don't think it has any impact whatsoever, but it's interesting little news story, and just one big name replaced by another big name.
Well, good thoughts from you, Peter. I enjoyed having you in studio these past 2 weeks. Final thoughts for investors?
Yeah, I think you need to watch what's going on in Europe. I mean, the precious metals market, may not surge right away, but it's starting to incrementally step up, and I think that has a lot to do with fear. You can't look at this strictly from a U.S. perspective. I mean, the Europeans, their currencies are depreciating, they're scared, so there's going to be some buying that continues out of the continent, and I think that could be price supportive.
Thank you, Peter. Thanks so much for joining us.
You're welcome.
And thanks for watching For Pete's Sake with Peter Hugg. You can email us at newsfeedback@kitco.com.